Now, with all this coronavirus issue happening around the globe, the markets have been affected quite badly. Markets globally are almost down by 25 to 30%. Now, wouldn't it be amazing if the investments which you make, you get higher returns as per the market? You also get the same safety benchmark which you get by investing in gold. And what if you also got the same secured and assured returns which you actually get by investing in fixed deposits? Now, imagine if you actually got all of these three benefits from one single investment. So, it's more like you are investing your money without actually worrying about it much. So today I will be telling you guys about this scheme, which in my opinion is quite good to invest in. But at the end of the day, you need to make sure that you do your own research as well. Now, real quick, if you're new to this channel, just want to let you know what this channel is about. This channel intends to provide a basic financial knowledge to today's youth, whether it's in terms of basic investing strategies or how to manage your expenses so that you avoid getting into a big debt at an early stage in your career. So if it's your very first time here in this channel and you think this channel can add value to you, then definitely start now by subscribing so you don't miss anything out. So with that said, let's get into it. Now the name of the investing scheme which you all want to know is all weather investing. It's a modern scheme which ensures your portfolio is quite well diversified. The portfolio is created in such a way that can actually generate a decent returns in all types of economic conditions. Their main objective was to actually develop a product that can be used by all the investors in all market situations, whether the market is high or whether the market is low. Now, I'm quite sure each of us we deposit a certain amount of money in fixed deposits, as these are secured returns. But what kind of return do you even get in a fixed deposit right now? 6%, 7%? You might be actually thinking that you get 6% return, but in reality, the return is even lower. There's an inflation happening every single year. If the inflation itself is about 4%, then obviously getting a return of 6% is more like 2% if you actually take inflation into picture. Now you want some kind of investment where you are able to beat the inflation rate and still make a good profit. But at the same time, you want the investment to be safe and you want minimum risk involved as well. Now this scheme actually solves that issue. They invest in gold, fixed deposit and in equity. They have what 40% investment in equity, 40% on gold, and the balance of 20% on fixed deposits. So it makes it easier for you as you are able to invest in all three in the same platform and the same place. Isn't that much more easier? Now, the bigger question is, which you need to understand, is why should you invest in all three? I mean, why should you invest in gold, equity, and in fixed deposits? With equity investments, if you know exactly what you're doing, you can actually beat the inflation rate. Your returns can be more than the inflation. The reason you invest in gold is purely because there's a safety involved in your investment, and you have this small assurance that your investment is quite safe. And when you're investing in fixed deposit, it's like you know you will be earning a certain amount of money. So when you are investing, it's quite important that you have this sort of a balanced portfolio where you are actually able to generate return and at the same time you're able to keep your portfolio safe. It just diversifies your portfolio. Now, another major reason why you should be investing in gold is because there are times when the stock market actually drops and the equity doesn't give return. And at that time, gold actually works. Now, equity and gold are somewhat inversely proportional to each other. What I mean is, when there's a boom in the stock market and equity or stocks become more attractive, people try to invest more money in the stock market. Now, at the end of the day, people have limited resources and limited money as well. So, with limited money, people end up putting more on equity, and because of that, less money will be left to invest in gold. And when the stock market crashes, people tend to be afraid from putting more money in the equity. And in such cases, what they do? They find other assets like gold, fixed deposits, which are more attractive, and they put their money over there. Hence, you will always see that when the equity crashes, gold goes up a little bit or doesn't crash much. But when equity goes up, gold prices drops as well. Now, if you want to know what kind of returns does this fund actually provide, in the last 3 years, where the large cap fund has actually given an average of 1.23% return, this fund has outperformed by 16%. In 5 years, where the large cap has given almost about 13% return, all weather has provided about 35% return. So basically, in spite of taking lower risk, this fund has actually given better results. Even if we check the last 6 months data, where the large cap has actually crashed by 18%, this scheme is performing much better. It's almost at 0% return. Like I've told you previously, guys, don't just focus on returns. Always check the basics while you're investing. Always check what kind of returns the investment will give when the market is actually crashing. Now, the last and the major part, if you guys are wondering how to purchase this scheme, you basically have to go on to the small case website itself. Over there, you will find the all-weather investing scheme, and once you have read the basics, you can start with a small investment amount as well. Now, just to be clear, this isn't any sort of sponsored video. I have been investing in this scheme for quite some time and saw pretty good results, even now when the Nifty and Sensex have been crashing. You can basically start investing in this scheme in an SIP format itself. Good part of the scheme is that there is no lock-in period, so you can exit the scheme at any point. And definitely because you will be investing in equity, I would personally recommend that you invest for at least 3 to 4 years just to actually see good results. Make sure that you go through the details before actually purchasing the scheme. So with that said, you guys, thank you for watching this video. I really appreciate it. If you did take away a few points from this video, I would definitely appreciate if you smash that like button and subscribe as well. Also, if there is any particular questions regarding this topic, feel free to comment them below or just drop me a message on my Instagram or LinkedIn and I'll try to get back to you as soon as possible. So with that said, see you all in the next video.